Hello, this is Julius from Basic Financials. Today I'm going to do a short video, just a reminder about interest allowed for tax purposes when you're renting out a property and you've got a loan. A lot of people are thinking that rules have changed and we're not allowed to get any tax relief on the interest anymore. It's not allowed as an expense. That's not entirely correct. There are bits of correctness in there, but there are also bits that aren't correct. The rules have changed, and what used to happen is you had your interest on a loan would be allowed as an expense against your rental property. So if you had £10,000 rent received and you had £5,000 interest, then your profit for the year would be £5,000, ignoring any other expenses, and you would get taxed on that £5,000 at whatever your rate of tax was. So if you're already getting other earnings elsewhere that puts you into a higher rate, then that £5,000 profit would be taxed at 40%. So effectively, you were getting 40% tax relief on that £5,000 worth of interest. The rules changed and were sort of phased in over 4 years, but we're now at the point where we're fully phased in. Now the difference is that yes, that £5,000 isn't allowed as an expense anymore. So your rental profit for tax purposes is £10,000. So if you're a higher rate taxpayer, rather than having paid at 40% on the 5,000, you're now paying at 40% on the 10,000. But here's the important bit that people are missing sometimes: you still are allowed a tax credit of 20% on that loan interest. So whereas before the top line would have been £5,000 taxed at 40%, now it's £10,000 taxed at 40%. Work out the tax, and then you get 20% tax relief on the interest of £5,000, and that comes off your tax bill. So the effect and the whole reason for phasing in that change is that the government wanted to stop higher rate tax relief on interest for buying a rental property. So effectively, you're still allowed the basic rate, tax relief of 20%, but not the higher rate. There are other implications for that. For example, the rental income might take you over the £50,000 for child benefit, paying back the child benefit, the high income child benefit charge. Whereas before your profit would have been 5,000, it's now 10,000. So your income is all of a sudden higher, because the interest isn't treated as an expense anymore. You get a tax credit on it. So there are other things to bear in mind there. That might change how much pension contributions you decide to pay if you want to keep yourself below a level of income. And the other level is 100,000. When you start to lose your personal allowance, it might take you over that 100,000. So there are a number of I don't know whether they were intended that to happen, but is what happened. So think about that. Now the other thing is, if you've made a loss in a tax year, then you still can carry forward any tax credit that's not being used. So in that example before, if you had expenses of £10,000 against your 10,000 rental income, so you had no profit, but you still had that £5,000 of interest, you would effectively not be getting 20% tax relief on that 5,000 because you haven't been able to use the tax credit, because you can only use the tax credit against the tax on the rental profit. So if you haven't had any rental profit, then you won't get any tax relief. You can't set that tax relief off against other tax on other income. But what you can do is you then would carry it forward as an unused tax credit to set off against rental profit tax in future years. So you haven't lost it as long as you make a profit again. So I hope that clears up a few misunderstandings. And again, you can always research on the internet, and it gives you an idea of what is allowed. And if you want to sort of fine tune on the rules, then have a look on the internet. And yeah, there's also a lot of guidance on HMRC's website, so use that as well. Thanks for listening. If you could like and subscribe as usual, and I'll see you again for another video soon.